Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of Cboe's Options Institute. It is Monday, March 22nd, so we're essentially 1 year removed from the market lows. Now, assuming no significant sell-off into the end of the month, it's set to be the strongest 12-month S&P 500 performance since the 1930s. Last week, the broad US-based equity indices declined slightly into the standard March expiration. The VIX index was relatively range-bound and closed just below 21 on Friday. The VIX futures curve declined across maturities and the March futures went off the board. April is now the front month contract. Now the April-May spread is right around $2 wide, so the front of the curve remains quite steep with 30 calendar days until standard April expiry. This is a 5-week VIX cycle. VIX options continue to run strong with average daily volume numbers running about 630,000 for the past couple of weeks. The standard April 23 straddle, which is the at the money, is right around 550 mid-market. VVIX, which is a dynamic measurement of 1 month implieds in VIX options, is running around 114, and that reading has also been fairly range-bound for the past 2 weeks. Now, in terms of economic data this week, we'll get a look at new home sales, durable goods, PMI, and weekly jobless claims, as well as personal spending. Also, on Wednesday, my colleague in the Options Institute will moderate a webinar on cash-secured put writing. On Thursday, the Cboe listings team is hosting another webinar with Van Eck, Kevin O'Leary, and Kathy Wood. And in April, the Options Institute will host Sheldon Natenberg, the author of Option Volatility and Pricing Strategies, for an education event about option Greeks. Take a look at our education calendar and get registered for those great events. All right, 1 year off the lows. VIX in the low 20s, S&P 500 just off all-time highs. Markets are incredible. That's Volatility 411. Thanks for tuning in.